Despite interest rate concerns, some clean energy stocks are worth a buy. Despite recent price action, these clean energy stocks still offer investors long-term value. NextEra Energy. Higher bond yields are causing some investor flight, making NextEra Energy an undervalued stock. American Electric Power. One of the nation's largest utility companies, American Electric Power is committed to renewable energy. Enphase Energy. Short-term headwinds shouldn't derail the stock's long-term bullish case. Let's dive in, bullish on clean energy. Here's why you should buy these 3 clean energy stocks now. Welcome to Timely Investment Research. A signature achievement of the Inflation Reduction Act of 2022 was the billions of dollars in tax credits to promote clean energy projects. About $40 billion of those tax credits have been tapped to date. That should be bullish for clean energy stocks. But this is a time when the law of unintended consequences comes into play. Many of the companies that are competing for those clean energy dollars are in the growth phase. That means many are not profitable. Some are even in the pre-revenue stage. They rely on debt offerings to fund their growth. That makes them sensitive to interest rates, and a federal funds rate of over 5% is having a significant impact on clean energy companies and, by extension, clean energy stocks. However, there are some opportunities. To find these, investors should look to companies that are generating predictable revenue and are already profitable. Here are 3 clean energy stocks to consider. 2 common threads that are woven through these 3 stocks are that they are all trading near 52-week lows, and they're all getting moderate buy ratings from analysts. Number 1. NextEra Energy. The first 2 picks of clean energy stocks are no pure plays on clean energy. In fact, they derive a significant amount of business from traditional fossil fuels. However, this is a time when playing both sides of the energy puzzle may be the way to go. That brings me to NextEra Energy. The company has plans to completely eliminate carbon emissions from its operations by 2045. It's also the world's leading generator of wind and solar power. NextEra Energy stock is down over 36% in 2023 despite continuing to post year-over-year increases in revenue and earnings. This is because the company is fundamentally a utility stock, and bond yields of over 5% are a more attractive alternative to the company's dividend, which yields 3.55% as of this recording. However, while analysts may be lowering their price targets, they're still overwhelmingly bullish on NextEra Energy stock. This will require patience, but if you're looking for a risk-free dividend payer, now with some growth down the road, this is a clean energy stock to watch. Number 2. American Electric Power. American Electric Power is probably not the first name you think about when it comes to clean energy stocks. The utility giant has a footprint spanning many states and 5.6 million customers. But the company also has an extensive renewable energy portfolio that includes wind, solar, and hydroelectric power. And it plans to add 17 gigawatts of new energy opportunities in the next 10 years. Like NextEra Energy, American Electric Power stock is down in 2023 by around 22%. One thing that may be helping American Electric Power stock is a dividend yield that is at 4.4%. If you're a longtime shareholder, that may be enough yield to keep you from shifting to the bond market. Analysts are not as bullish on American Electric Power stock as they are on NextEra. However, the majority of analysts are still in the buy camp, and the stock has a price target that suggests growth of over 26%. Pair that kind of gain with a dividend, and you'll be comfortably ahead of inflation. Number 3. Enphase Energy. Enphase Energy has been one of the darlings among clean energy stocks for several years. The company has a portfolio of products that support solar energy and energy storage. Its signature product is its microinverter, which allows solar panels to efficiently convert AC power to DC power. And in 2023, the company introduced its bidirectional EV charging solution. However, concerns over the company's slowing rate of growth and reliance on the North American market are 2 reasons the stock is down nearly 50% in the last 12 months. The company is indirectly affected by higher interest rates in as much as they affect residential and commercial solar panel installations. That's been bad news for investors who relate to Enphase Energy stock. On the other hand, taking a wider view, the stock is up over 2,500% in the last 5 years. The long-term outlook for the solar industry is still bright, making Enphase one of the clean energy stocks for investors to consider. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, Please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.